Good evening, everybody. Thank you for joining us. We're going to go ahead and get started. Might have a couple of people joining us as we keep going, but that's okay too. So I'm going to share my screen and start us off with some housekeeping slides, and then we'll get to the good stuff very soon. So my name is Caitlin Wally-Stoll. I'm the person who's been emailing all of you. I'm the team leader and farm business management specialist for the Southwest New York Dairy Livestock and Field Crops team. But luckily I'm just doing the introduction, so you won't have to listen to me all night. We have three really great speakers, presenters, super knowledgeable folks. I'll let each of them introduce themselves in just a little bit. But just for some grounding, housekeeping type things, this workshop does go until 9 p.m. We'll keep it open a little bit after that, just in case folks have some lingering questions that they want to ask. If you have anything that comes up while we're presenting, if you have questions or comments, you can go ahead and type them in the chat box at the bottom of your screen. Right now, we've got everybody muted and without video, just to help streamline the presentation. And everyone should have received an email with links to tonight's resources. We did send out some paper mailings to folks for an activity that we're going to be working on tonight. If you, depending on when you registered, you might not have received them yet. So if you didn't, just send me an email, or you can send me a message in the chat box and we'll track that down for you. And then after tonight's course, we're going to post a survey link that you can use to evaluate this presentation. And we'll also send out a follow-up email to everyone that will include the video recording, the set of the slides that were presented, and another link to the follow-up survey. So please, if you've got the time, fill that out. We really do read them, and we will use that information for future workshops as well. And then we do still have 2 more workshops coming up in January. So if you're not already signed up for those, you can visit tinyurl.com/CCE Tax School to get registered for those. Additionally, if you missed out on our first series, income tax planning, just send me an email or a text and we can hook you up with those recordings if you are interested in that information as well. A disclaimer that we want to offer at the beginning, because this is all about tax preparation, as well as record keeping and financial management. We are not tax preparers. We are not CPAs. We're using our best judgment and the knowledge that we have available to us, but changes are constant, and you should be working with a tax preparer that's well-versed in farm management for situations that apply directly to your farm. And then finally, we want to thank our sponsors, which include 2020 Consulting, MBT Bank, Farm Credit East, and New York FarmNet. Without their help, we wouldn't have been able to offer this at such a low cost and offer scholarships for our folks that needed those. And then one final thing that we are telling everybody throughout this series is, as you go through tonight's presentation, rather than worrying about, keeping track of everything that's said and trying to commit everything to memory, hold on to the pieces that really mean a lot to you, to your business, and information that you can use on your farm right now, 2 weeks from now, 2 months from now. And that is it for me. So let me go ahead and stop this, and I'm going to turn it over to Steve, I think, Dayton, Joan. You guys, I'm going to turn it over to somebody. I'm out. Thanks, everybody.
Joan, do you want to just take us through the agenda or get us started? Or what's your plan? Joan,
I'm on mute. I was on mute and my my mute button was hidden below the screen. So I got it back where I can see it now. Great. Thank you, everyone, for joining us tonight. You should have received a copy of the agenda either via email or in your packet. But really, our goal tonight is to help you figure out what works for you for a bookkeeping system and get a little bit familiar with how to keep records, whether that bookkeeping system be something that's a manual, hand-kept system, or you use the computer to do it. Our goal is not tonight to say, one system is better than another, but rather to help you make good use of the system that you have chosen or choose to make sure your records are accurate and timely, to be able to keep a basic system for that'll help you to make decisions in your farm business, to help you be able to understand the difference between annual operating expenses and capital expenses, and understand why depreciation is used. Also be able to think about what's the difference between income from the sales of products and income from the sales of assets. And lastly, to help you determine a way to avoid commingling of business and personal financial transactions. That's really the things that we want to accomplish tonight. And we're going to do that by starting out with a quick poll that Steve will lead us through on why we keep records. From there, we'll talk about some of the rules of business versus hobby and what's the difference. Dayton will help us with that. And then I'll get us started on an exercise, and we'll break out into some breakout rooms and have fun with an exercise for 20 minutes or so. At the end of that, we will, and you'll get to try your hand at a little bit of bookkeeping and maybe have some discussions of how to do different entries. Then we'll take a very short break and then come back together to review those transactions and talk about those. Lastly, finish up with a review of what the Schedule F that IRS uses is, and a little bit of discussion on bookkeeping systems, filing systems, and records retention. That should keep us pretty busy for a couple of hours. So it's a pretty ambitious schedule. I'll throw it to Steve to get started before I start coughing at you.
All right, well, thank you, Joan. Who are you? Well, I'll go to Dayton since Joan is coughing. Who are you, Dayton?
All right, Steve, thanks. So my name is Dayton Maxwell, and I am a farm business management educator with the Capital Area Agriculture and Horticulture Program. And I'm on Steve's team, and we cover 6 counties in Eastern New York, Washington, Rensselaer, Albany, Schenectady, and Columbia Green.
Great, thanks, Dayton. And so, Joan, you told us what we're doing, but who are you?
Oh, who am I? Okay, I'm kind of a phantom person here working from Warsaw, New York tonight. I'm part of the Northwest New York Dairy, Livestock, and Field Crops team. We cover, as a part of that team, the areas between Niagara across to Wayne County, down to Seneca, and back across to Wyoming. So there's 9 counties in the region that I work with, and I work as the farm business management specialist, one of 2 on that team.
Okay, thank you, Joan. And Caitlin, introduce yourself. So I'm Steve Hadcock. As Dayton says, I'm on the Capital Area Ag and Hort program team with him, doing beginning farmer market development education, primarily with my beginning farmer hat on for sure, is that I focus, concentrate more on the business side of things. So I'm trying to get people started on the right foot and thinking about record keeping, business planning, all of those kinds of things are important if you want to ensure or enhance your chances of making your beginning farm business successful. So we have a survey, Caitlin, if you want to pop it up. We want to start out tonight, and I might play. You can scroll up and down, and choose which top 4 are your most important ones. Feel free to choose as you go. And I guess we want to know, and we want you to be honest, because this is all anonymous, okay? As to why you think record keeping is important. And we'll just give you a minute or 2 here to complete it, and then we'll talk a little bit about it. Okay, just another moment or two.
So it looks like we've got 85% of people participating, which is pretty dang good for a Zoom call at 7 o'clock at night.
Yeah.
90%.
Hey, I'm patient. I make things uncomfortable and force people to use it. So yeah, thank you, folks. This is great. So we're up to 90%. And as expected, income tax reporting is way up there. But if anybody wants to unmute themselves and share for the first one, to measure farm profits and assess financial position, what do you mean? What does that mean to you? Why is that important to you?
Don't be shy, folks.
Right.
I would say just to figure out if what you're doing is even worth it.
Okay. And are you talking about as a whole, the whole farm business? Are you thinking about drilling down on a particular part of it, or just the general assessment?
General at this point.
Okay. Anyone else? I mean, there is a purpose for why these. Okay. Right, and so Barry shares that we really need to have a profit that meets the income needs in order to be sustainable and have a high quality of life. That's good. Do you see some similarities in some of these statements? And if so, what ones do you think kind of go along with one another?
To see if you're making any money.
Yeah, several of them are geared towards that, aren't they? To see if you're making any money, but any of them help you to any of these? Do you think that might help because you're keeping records? Any of the other statements might help you drill down and see, look at quote unquote profit centers or various aspects of your business.
Well, to see the high points and the low points.
Right. Yep. See, and if I could take that a little further, I would say that then, good records are will help you assess the financial position and condition of your farm business, but that should generate questions. Okay. Well, especially if you are going to the point of doing some comparing yourself to some benchmark values or certainly, we're not talking that much about it tonight, but if you're doing any kind of tracking things on a year-to-date basis and kind of comparing things on a month-by-month basis, not sure what kind of businesses we have here tonight. They could be all over the board, certainly, but many farms are cyclical in their income and expenses. So you may want to maybe looking at things on a month by month basis and saying, well, this expense looks high for this month. Why is that? So, good records are going to help you. Are going to essentially going to for encourage you to ask questions. Well, why, especially a why question as to why something may not look correct. And then you can do more digging. Mark shares it's about being aware of your farm's business health to make informed decisions. A great way to put it, Mark. Thank you. So if you ask the questions why, then you can look at look at individual enterprises, and also based upon what you learn from your records, then you set some financial goals and also potentially do some budgeting. That we're getting very close to the beginning of 2022 here, and now either early 2022 or now is maybe a good time to start looking at your records, and we're going to be talking about that more tonight, so that hopefully you have a little bit of time here to brush up or your records so that they're in better shape or look different for 2022, so that in early part of 2022 potentially you're able to look at 2021 and see where things stand, and then make some goals for 2022. It might be only one income factor, it could be a couple of expense factors, or maybe you want to do whole farm cash flow or cash budget, and that could be a very powerful tool to use as a way to measure farm profit or measure to some extent the progress that your farm is making. So I guess kind of finish up, many of these are kind of interrelated, and I think the take-home message is that financial record keeping on a farm should not be solely for income tax preparation. That is a big part of it, because good good financial records are going to save you money when you have your tax preparer do your income tax return for you. But they should be first and foremost your business, a key component of your business management. So with that, I'm going to turn it over to, I believe, Joan, or excuse me, Dayton, to continue from here, Dayton. Thank you.
All right, Steve, great introduction. And I would echo just what you said, that good farm records are essential for making decisions. I'm going to try, let me see if I can share a screen. I might need some. Oh, I can do it.
Just to let you know, we can't see your screen, Dayton.
You can?
Yep. Yes.
Okay, so, all right, this is
There we
me,
go.
and
I can see it.
all right. Elizabeth Higgins told me the other day I need a new picture, that this one wasn't that good. I didn't tell her that's the only picture I have, so I could, anyway, that's a story on that. All right, so I'm just going to spend a few minutes, maybe 10 minutes, just talking about a business versus a hobby and what's the difference, and how the IRS looks at this. And everything that you'll see from me is directly from publication 225, the Farmer's Tax Guide from the federal level. And that the Farmer's Tax Guide is essentially the Bible for federal farm income taxes It's a lovely document that can answer really any question about farm income taxes. So this is just right from that guide. So, so the nice thing about if you are a farm business that's operating for profit, what the IRS says is that they'll let you deduct your operating expenses, and you do that on Schedule F. So therefore, you can deduct those operating expenses to offset the income. All right, and we'll see a Schedule F a little later. And let's see, so the big difference is if you do not operate the farm for profit and you cannot demonstrate that you do, you're not able to deduct the expenses, but you have to report the income. So operating the farm for profit lets you offset the income by reporting your expenses and getting to a net income number, which effectively lowers the amount of taxes that you can pay. So obviously, I think everybody on this call wants to demonstrate that they can operate or are in business for profit. Right. So to determine this, the publication 225 says there's facts that will be taken into account. I'm just going to go through these facts and I'll kind of summarize at the end. All right. So the IRS is going to say, hey, are you operating in a business-like manner? Are the time and effort you spend in your business, do they indicate your intention to make a profit? And whenever, and I know Steve will say this too, that starting or this, I would recommend having separate records, separate bank accounts, separate credit cards, everything that you do for your business, keep it entirely separate from your personal financial situation. So that's a really good way to tell the IRS that my intention is to make a profit. And another good question, the IRS will say, well, do you take a living wage from your farm business, or do you depend on the farm business as your livelihood? So that definitely will tell them that you are in business to make a profit. And if you don't make money, if you lose money, are they due to circumstances beyond your control, or are you in the startup phase of farming? I don't know that it was this class, but in other classes we've had a person say, well, hey, I'm going to get into the orchard business, or maybe it was a vineyard, and I'm really not going to have any income for 7 years. And the IRS recognizes that, and they say, hey, we know you're in the startup business, and we're not going to give you the profit or hobby test until you get through that phase. All right. Change methods of operation, and are you changing to improve profitability? Are the advisors you use in your business, whether they're salespeople or consultants, do they have the knowledge to help you carry on the business? And success in making a profit in similar activities in the past. So kind of the IRS is saying, well, are you sticking with kind of a certain thing, and are you trying to do it better all the time? Are you trying to make a profit rather than switching enterprises and doing different things? All right. So if you make profit in some years, the IRS is going to say, are you reinvesting the profit and growing the business? So that would say to them that your intention is to make a profit. So they would probably like to see, gross income grow over time to just show that you're making a profit. All right. So here's kind of the thing. So you're considered for profit by the IRS if you produce a profit in at least 3 of the last 5 years, including the current year. So they would say if you made a profit in 3 out of 5 years, you're in business for profit and not a hobby. And I'll comment on this at the end. And however, it's a little different for activities related to horses, you have to show a profit in at least 2 of the last 7 years. I used to work with some equine students, and they used to, why is that different? And they don't have it. Maybe it's riskier, I would assume, or maybe the IRS thinks that that's a riskier venture. Although I would argue that all agriculture is risky when you're dealing with living things. And I think we said this, the activity must be substantially the same for each year within the period. And we know that a profit is determined when gross income after expenses is a positive number. That's what the IRS is going to look for. And so wait a minute. So if your business or investment passes these 3 out of 5 or 2 out of 7 if you're equine, we can presume it is a profitable business. The IRS would say that it's profitable. Well, wait a minute. So, and if you fail this, if you fail the 3 out of 5 or the 2 out of 7, you still, and here's kind of a good talking point, you still may be considered with the intent to make a profit, even though you didn't meet those guidelines, because what happens is you kind of fall back to considering those factors that we talked about earlier. And I recall from our last class, Paul Vandenberg, the farm credit consultant, mentioned that he had a company that didn't meet these guidelines, and he had to go back, fall back on those factors that we previously mentioned, and just write a letter to the IRS and say, look, even though these people didn't pass this 3 of 5 or 2 of 7, they are certainly in business to make a profit. And he said that he was able to get the IRS to accept that, but it was a lot of work. He sent them loads of documents. So, all right, and so again, if you're starting out in farming, you don't have 3 years, 3 out of 5, you don't have 2 out of 7 years in the equine business. So what the IRS says is, well, we're going to let you operate for 5 years, or we're going to let you operate for 7, and then we're going to give you this test. And so here's the thing. So there's a form that you've got to file to kind of tell the IRS, hey, I'm a startup and I need some time here to demonstrate a profit. And the form is 5213. Again, this is all in the Farmer's Tax Guide. And within 3 years after the due date of your return for each year and what you've first carried on a farming activity, or if the IRS writes you a letter and says, hey, we think you're a hobby, you need to respond in 60 days and send them this form. So yeah, so that's the thing. Yeah, and I think, yeah, this will be a next piece here. So are there any kind of a slam dunk version of this? Are there any questions or comments, concerns?
This form 5213, if you're making
sure.
a profit within the first 3 years, do you have to submit it?
Well, I would say great question. So if you're a startup and you are able to demonstrate that you made a profit 3 out of those first 5 years, I would say you don't need to do it. This is just kind of letting them know that, hey, I'm a startup and I'm really not going to be talking to you for 5 years. That kind of is the thing. So I'd say, is this Beth? Is that you?
I got it. Thank you. That's great.
Yeah, you're welcome. Yeah.
And do you submit this form when the year that you begin trying to make a profit or conducting sales, or would you submit this form in the investment phase before you begin to conduct sales?
So I would say after you've already started a business. So this is the verbiage directly from the Farmer's Tax Guide. So you've got to file it within 3 years after the due date of your return for the year in which you first carried on the activity. So that would seem to me like year 3 after you've started started business, yeah. Anything else? Joan or Steve, is there anything in the chat that people have questions?
You've got them.
Okay. All right, so I'm here all night. If you have any questions, just ask, and I will stop sharing. And what's up next, Joan?
I'm up next.
All right.
Let me just share my screen here. Okay, that'll get us started. Oh, I'm in that presenter mode. Are you seeing my slides or presenter?
Right now, Joan, we're seeing like your PowerPoint system slides, so not the presentation part yet.
Ah, okay. Well, let me stop sharing. Let's see if we can make that work again.
Now we're seeing the presenter view. We're getting there.
Well, we're gonna stick with presenter deal for tonight.
That works.
I've got duplicate screens here. I should have shut one of them off. But
It's okay.
we'll-
Actually, it shows up pretty small. If you go right up to display settings and click the down arrow, and then click swap screens,
oh,
it'll
I see it. Yep.
do its thing.
There we go. How to do? Is it there yet?
It's still catching up.
Okay. Well, this is an introductory slide, and so I've been kind of doing this thing for a long time, and we're not going to spend a lot of time on slides anyways, but I wanted to talk a little bit about accounting methods as we got started, and that there is both cash accounting and accrual accounting that are the two different types. Cash accounting, we record the income when it's received and we record the expenses when it's paid. Most farm businesses use a cash accounting system. The accrual accounting system, sometimes called double entry bookkeeping, records the income when the sale occurs, whether or not a payment is received, and records the expenses when they're incurred, even if they're not paid yet. It basically matches the income and expenses to a production period, for example, a fiscal year or a calendar year. We use our bookkeeping systems to kind of keep track of things, and I like to think about our systems as being several in nature. We use them to organize our transactions and records. The first type I often refer to as the over-the-visor dashboard or console method. I don't know, does anybody here employ that method? That's where the inside of the farm truck cab is the primary place where farm records are stored. I don't necessarily recommend that one. Sometimes you lose track of some of your deductible receipts when using that method. The next method, the shoebox method, where we just keep gathering everything up and putting it in a box and we'll deal with it later. And that's all well and good. It keeps it all together. But it usually means there's a lot of work to be done all at one time to get the records in shape, to be able to make any kind of a decision and use that information, or to get your taxes filed. And I've seen some pretty painful looking faces as people try to get organized to either understand whether they're making money or not, or whether or not they want to make a specific investment. And so that one's probably not that highly recommended either. The other method is the spindle method, a little bit like restaurants use when you see the waitress put that receipt onto like a nail there in the next to the register. At least that keeps things so they aren't flying around and getting out of the way. But that one, I would encourage us to think about something else. The folder method, many people put them in a monthly folder, or they have an accordion folder separated by months, and they'll put their receipts in those to keep track of them. And lastly is the last couple are the ledger system, where it's a system of columns for recording your income and expenses. And then many of us are moving to computer-based systems. And really, these last two systems are very effective systems, and I encourage you to think about them as you move along. Our goal for tonight is to really talk about record keeping from a tax perspective, and we'll spend more time talking about the Schedule F, but this just gives you a quick look at what that tax form looks like. Not unusual for a lot of tax forms. And from there, I'm going to stop screen sharing and there's my stop share button. And we're going to jump right in, because one of the best ways to learn is to dive in. And so we're going to let all of you work together. Caitlin has put together some breakout groups for us to divide us up into small groups. And my instructions for this exercise are, first of all, give me a thumbs up if you received our packet in the mail. Or make a note in the chat. Okay, looks like we've got quite a few folks that got things that got stuff in the mail, or you know, have, and they should be pretty well good to go. Or you would have gotten stuff in an email from Caitlin as well, that had the information available. And so what you should have is a couple of things, and I'm going to hold one up right close to my camera, is this little mini copy of the Cornell Farm Account Book. And you also have a list of entries that were sample bookkeeping entries. And those sample bookkeeping entries are what we're going to do is use this ledger book to get from point A to point B of having a ledger completed. And we'll start out doing that. Steve and I and Dayton will each be in some of the separate groups, so that we are able to help answer some questions as you're going along. And then I think also one of the things I want you to do is take some of those things that you aren't sure what to do with them and circle them and make a note of the questions you have, and we'll come back together as a group after about 15-20 minutes and share those questions back with the group. From there, we're planning to spend about 20 minutes, or 15-20 minutes, so 7:50, 7:55. We'll come back from breakout groups. If at the end you get finished up a little early, feel free to take a break and make a pit stop, or get up and stretch for a moment, and then we'll be able to jump back in and review those bookkeeping entries. Let me just say, are there questions going into this? Hearing none, it sounds like our
So-
group is game to try this activity. So Caitlin, you want to send us off to breakout groups?
Yep, just 1 second. Technology is really great when it works. All right, I think I've got it all set. So everyone will get a little pop-up that says you've been invited to join XYZ breakout room. Just click OK, and it'll take you there automatically. And put up a warning to bring you back to the main group. If you, for some reason, lose internet connection and get locked out, just click on the Zoom link to log back in, and I'll get you situated from there. Okay. All right. Have fun, everybody. Hey, Joan, you're muted.
I'm muted, thanks. Must be we mute when we come back. Were there lots of questions in your group, Dayton? You're muted.
My group was superb. There was a few people in there that just were really carried on a nice conversation, and I think we did really well.
Great. Steve, did some questions come up along the way in your group?
I had rock stars, Joan.
Me?
So they were general orientation. Seriously, the state, a couple of them did wrestle with some of the income and expenses that were provided, but I told them to relax, that it's a work in progress, and we all learn all the time on how to categorize and handle these things.
Yes, I think that's important. So I don't know if everybody got through everything, or probably like most of us, you got most of the way down through the list of expenses. I can say my group was rock stars too. It's amazing how much knowledge is there within the group of us that have had some experience, and those that are learning will get better as they go along. So I think that's one of the things that will be helpful. One of the things that I am going to do is send along a key to everyone, and that key will give you the correct column in the ledger to put that, as well as it's going to give you a farmer's tax guide reference as to where to go in that farmer's tax guide to find more information. And so that's one of the things that we will spend a little bit of time doing. I just see a question in the chat. Mark asks, are there account books for other types of, whoops.
Sorry, I had already clicked send when you saw it, so.
Okay, great.
Hopefully I said the right thing.
Perfect. There are other ones, and the other thing I also encourage people to do is in the classic book, one of the things that we can do is take that page that says it's dairy receipts and make yourself a bunch of columns that are applicable to your kind of business if you're not operating a dairy. So I think that's one of the pieces that is there that's handy with that ledger, is it can be customized. And as the other option for keeping a ledger is you go out and buy some ledger paper, buy the widest number of columns you can, because you'll have more columns you want to add later, and give the things their own titles. But as you're doing that, keep an eye on your Schedule F so that you're knowing where on Schedule F it might need to go. That's kind of one set of a chart of accounts to work forward from. What were some of the things that folks wrestled with? If anybody wants to bring a few of those up for discussion.
Joan, we wrestled with the major engine repair and also the new tin the tin for a new building. So we were
Okay.
trying to think about if that was a capital item or an expense.
Okay, so I'm going to refer directly to the farmer's tax guide on those. And basically the capital expense, this is what the IRS tells us. A capital expense is a payment or debt incurred for the acquisition, production, or improvement of a unit of property. You include the expense in the basis of the asset. Uniform capitalization rules also require you to capitalize or include the inventory, include in inventory certain other expenses. See chapters 2 and 6 for more information. But capital expenses are generally not deductible, but they may be depreciable. However, you can elect to deduct certain capital expenses, and it gives you very specific ones here on page 25 of the Farmer's Tax Guide. The other things it says is generally the costs of the following items, including the cost of the materials, hired labor, installation, are capital expenditures. Land and buildings, additions, alterations, and improvements to buildings, cars and trucks, equipment, machinery, fences, draft, breeding, sport, dairy, and dairy livestock, repairs to machinery and equipment, trucks, cars that prolong their useful life and increase their value or adapt them to a different use. So that kind of gets at those two things. The tin is part of that new structure, that new shed that's being built. And so you need to basically, when you're doing something like that, you need to give yourself a category where you can keep track of all of the pieces that are going into that shed. And then when you start to use that shed, you will assign it a cost based on what you've spent to build it, and it'll be depreciable from there. Does that help, Dayton?
Yes, yeah, so it sounds like both those were capital items, right?
Both of those were
major
capital
engine.
items. And if folks want to make a note, is they're in their farmer's tax guide, they can look to page, I'm gonna find it here. Thought I bent over all the pages I needed. They can look on page 43, table 7.1, and it gives the farm property recovery periods. That tells us how long we can depreciate items over. And there are two different systems in there. And I think this is important to recognize, particularly when we're talking about people who are early on in the startup of their business. So we want to think about the GDS system, or the general depreciation system. And as we look at that table, the general depreciation system, for example, for agricultural structures, under the general system, it would depreciate over 10 years. Under the ADS system, or the alternative depreciation system, it would depreciate over 15 years. When would it be advantageous? And if you would want to throw some answers in the chat, when might it be advantageous to depreciate something over 15 years rather than over 10 years? We'll watch the chat for some answers. Yes, we don't need don't need as much depreciation right now. You maybe aren't having, if it's not a great year or you're in that early phase. You want to save depreciation to offset future income. That's a good one. Those are some really good reasons, particularly early on, when you're in the startup phase of a business. You may not have as many profits as you do a few years down the road. And so you may want to save some of that depreciation for later years. And a lot depends on your personal situation and where you're at. Now, the other thing, I want to go back to that tractor overhaul a minute and talk about whether or not that tractor overhaul is really an annual or a capital expense. In the true sense of the word, it's a capital expense, but spending a couple $1,000s to repair that tractor, there might be a big difference on the size of the operation. The IRS talks about something called a D- or a small expenditure that you would write off annually versus depreciate. And that D- type of expenditure is something that you kind of have to sort of put a plan in place that this is going to be what my accounting system is going to do. For example, any expenditure over or under $2,000, I'm going to direct expense. Anything above, I'm not. And that really, it has to be set up based on your business. A D- expense for a new startup business on 3-4 acres growing vegetables is going to be very different than the D- expense for a large row crop enterprise operating over several thousand acres. But you have to have established that at the beginning of your accounting year to be able to use those D- rules to not capitalize some expenses that would typically be capitalized.
Joan, can you repeat that again?
Okay, and I can give you some. So basically, the D- rules say that if it's a minimal expense to your business, if it's not a significant expense for your business, and you want to be able to just expense that in the year you purchase it rather than capitalize it and depreciate it over a number of years, you basically have to establish what those rules you're going to follow for your business are and be consistent with how you apply that throughout the year. Does that help, Teresa?
What did you say the comparison was between the row crop and the vegetable? What was that?
Well, the difference between the row crop is so if you have a couple acres of 2-3 acres of vegetables and you spend $2,000, that might be a pretty good sized expenditure for that business. Whereas if you have a large row crop enterprise operating over several hundred or several thousand acres, $2,000 is really an insignificant expense to that business. And Carolyn asks, is that limited to $2,500 per incident? And there's very detailed instructions in another publication, Pub 535, about business expenses. And yes, if you do not have audited financial statements, it is limited to $2,500. It can be as much as $5,000 if you have audited financial statements. So that's one of the places that it is in the rules as to what can be D- expense. Great, and Caitlin has just put the Pub 535 reference in the chat box as to where to get that publication, and you will find that information in the business expenses chapter of that publication. Great. Any other questions or any other things? You know, sometimes there's a lot of gray area as we're working through this. And I think that's one of the things that we really want to think about is some of those gray areas and how we address those gray areas. And the tin was a good example. Another one would be the barbed wire might be a good example. You know, was that for a new fence or was that for repairing the fence? Again, did you establish a rule for whether or not you could just write that off in the first year, in the year that you purchase it? Excuse me. Shipping costs, that's a good question. Thank you, Barry. And the shipping costs basically are part of the cost of buying whatever the item is. So if you purchase seed, for example, I would encourage you to just include that in the cost of the as part of the cost of the seed. Dayton, Steve, do you concur with me on that one?
Yes, I agree 100%. I'd put it as part of the seed cost.
Yep.
That was the cost of getting the seed to your farm.
Yep, the delivery cost. A little bit about personal and business. One of the things that that I see happen out there as I'm looking at farm records with people often is that we have a credit card and we're using the same credit card for business and personal expenses. And the IRS says that if we do that, none of those are deductible business expenses if that's a personal credit card. So I think it's really important if you're going to be making some online purchases for your business, those kinds, and returning those, you know, and then paying those as you go along. It is important that you have a separate charge account. And it's also, I think, really important. It helps us really be responsible to our business if we keep a separate bank account or checking account for the farm business from the personal account, rather than mixing those up. Okay, we have questions coming in. I'm going to rely on somebody to relay those questions to me so I can be thinking on my feet here.
Carol Lee says, with transport of animals purchased, you keep them in the animal cost?
When you're, let's say I'm going to just sort of make some for instances. So you bought some animals at an auction and you're transporting them home yourself. You could call that freight and trucking on a separate line. That could also figure into the fuel, and that also may, you're putting fuel in the truck, that would go in your truck expenses. Probably it's going to be easier than to try to figure out just how much of that was, that you keep those separately. Whereas if you hire somebody else to deliver them to your farm, then I would put them right in I would put that right in and spread it across the cost of each animal.
Well,
So that
wouldn't it matter if it was a capital or operating animal though? If you were buying breeding stock as a capital investment,
technically, yes. Technically,
then with that, you would just want the cost of that animal, wouldn't you? You would put trucking as a separate line item versus an animal, a feeder. That's part of the cost of that feeder. So sure, but that's not a capital item. That's an operating item.
That's again one of those gray areas where it's important to talk with your accountant.
And I would just share kind of a easy rule of thumb that I've used from some accountants, depending on how you got billed for things. So if you were billed on the same bill for the animal and the trucking, then you would just loop that with the animal. But if you got a separate bill from a trucker and a separate bill from the owner of that animal, then in however your accounting system is set up, it's just as easy to take that trucking bill and throw it in your freight and hauling category. And then I think the other, like the big, from the farms that I've worked with, that freight and hauling category comes into play a lot more if you're selling things and paying for that freight to sell things. Because in that case, you really are sometimes working with a contractor or somebody else to haul those items.
Okay. Other questions as we start to wrap up this section?
Well, Carolee says it was a trucker and also the commission and the beef checkoff.
The commission and the beef checkoff, again, if you're on the selling side, those expenses are, again, your freight and hauling expense. And then it would be like an advertising and promotion expense, would be where you would put the beef checkoff. Well, to kind of wrap up this section, I'm glad that people asked lots of questions, because that is how we learn in these things. And there's a lot of little ins and outs and bits and pieces. And I would just refer you back to the Bible, if you would, of farm tax preparation, and that's the Farmer's Tax Guide. It's a great handy reference. I would also offer up to you that if you really need a sleeping aid, you can read that bugger cover to cover, and probably it'll help you get to sleep for for several nights in a row, unless you get really enthralled like a few of us do by reading about accounting procedure. Or the other side of the coin, if it really makes you fret about whether you're doing things right or wrong, then set it aside and use it as a reference. Don't just try to read it and get all confused. And remember that that's what your tax professional is there for. And if you have items, either make a line that says, ask the accountant in your electronic bookkeeping system or in your ledger, circle the things that you're not sure about where they should go. So that you put them in that left-hand column, circle them, and then you and the accountant can work, you can walk down through and come to those items and ask very quickly when you're meeting with them to get answers to those questions. And they're going to know your tax situation, and that's the best way to work your way through that. Good. I'm going to throw it to you, Dayton, to walk us through a little bit about Schedule F.
Okay, Joan, so I have a Schedule F. You want me to work on 4797 as well while I'm right here?
Sure. Yep.
Okay, yep. So let me share my screen. And okay, so here's the Schedule F, and this is kind of, this really is essentially an income and expense statement. And the top side of the Schedule F is the income items, and the bottom side is the expense items, which I'll go over. Oh, I'm getting ahead of myself. Let me go back. Okay, so top side of Schedule F. So obviously farm name, you may have a social security number on there.
We are looking.
There's
Oh,
a
there we go. You're
code
back. It's
that
caught up with us.
you're-
I'm
Okay.
sorry. It's taking a minute to catch up, but it's caught up.
Okay, sounds good. Thank you, Joan. There's a code number which kind of indicates what type of farming you do. What type of accounting method, cash to accrual. I would venture that everybody on this call is doing a cash method of accounting, which is recording income when it's received and recording expenses when they're paid. So, and this is for the year, this form is for the year 2020. And if you're an entity, you have an EIN number. If you're a business entity, just ask you some questions. Did you materially participate in the operation? Most of you will say yes. Did you make payments in 2020 that would require you to file Form 1099? 1099 is for an independent contractor. So somebody, if you hired a custom operator or something. But if we get down to part one, which is essentially, so this is if you're working in QuickBooks or you have your farm account book, this is the income side your farm account book or your QuickBooks or your CenterPoint or whatever accounting software that you have. So the top side works just like a cash income statement, sale of livestock or resale. The interesting thing here is or other resale items that you might have purchased. So these are items that you may have purchased and then resold. So I guess, let's see, I'm trying to think of an example here. Maybe if you purchase, my neighbor has a retail, well, that wouldn't work either. Maybe if you purchase in some feeder animals and then resold them at the end of the year, that would be a good example here. So you sold them for a certain amount, say you sold them for 10,000, but you had a cost basis of maybe 8,000 there, that would go in line B. So we get a gross income number there. And then what I see a lot of, line 2, sale of livestock or produce or grains. I work with a lot of dairy farms, so I see on line 2 a lot of cull animals there. Well, no, cull animals run $47.97. Let me go down. What I see a lot of is 3A. Well, no, I'm sorry, I'm getting out of control there. So I'll see milk sales on line 2, cooperative distributions, line 3, etc. So you kind of go all the way down through here. For those agricultural program payments, so money that you receive that's taxable from the Farm Service Agency, Commodity Credit Corporation loans that, so grain farmers there might put in something for the CCC, crop insurance proceeds that are taxable, custom hire, if you did some custom hire work and received income, fuel tax credit income that you received. And so really all the, again, the top side of your accounting of your farm account book is going to be the top side of the Schedule F. And yeah, so that's the thing. So, line 9 is the total gross income. And if we get on down to the expenses, a lot of what you may find useful in setting up your farm account book, if your farm account book can mirror, well, maybe not mirror, but kind of replicate the Schedule F, it's fairly useful because at the end of the year, then you'll have all your categories and they just plug right into the Schedule F really nicely. And your tax preparer will love that. Because I was just before class tonight, I was working on a Cornell dairy farm business summary for a farm in our area. And the person that I'm working with, they had some kind of really scattered records, and I was searching all over trying to make numbers add up and find everything and get things to fall into these categories. So anyway, so the better records that you have, your accountant will appreciate that. Yeah, so car and truck expenses, just vehicle registrations, things there. Chemicals, I see it in my line of work, or generally where I work, I'll see these are for maybe crops or maybe even chemicals for a milk house or something like that. Conservation expenses, again, you could look at the instructions, but things like maybe grass waterways, things like that. If you paid somebody to come in and do custom hire work. Depreciation, I just want to spend a little time here on depreciation. I'll say this a few times. Depreciation is the area where the IRS lets the farm business expense the capital cost of an item. So depreciation is the area where the IRS lets the farm business expense the capital cost of an item. And they have this in various forms, which we'll look at in a second. Or the IRS has systems for depreciation, which your accountant will help you work with. Employee benefits, feed, fertilizer, freight and trucking, gas, fuel and oil, all pretty self-explanatory. Insurance. Interest that you can pay, that you pay on loans associated with a business. Now, again, principal is not deductible, loan principal. However, loan interest is. Loan interest is I like to think of interest as a rental fee for using somebody else's money. So we're gonna, that's a cost of business. Hired labor, pension, profit sharing plans, all these things. So again, the bottom side of Schedule F is essentially your expense side of your farm account book. Yeah, and again, like I said previously mentioned, just using these accounts for your farm account book tends to work well to facilitate, help your accountant so they're not looking all over to find information. And then we just take the gross income and take out expenses and we get a net profit. And that will carry forward to yours. I think it's Schedule 1 and then that flows to 1040, which we all are familiar with. So any questions on the Schedule F before I move on?
You might have touched on this, but let's say you receive a grant. That's obviously not earned income, but other income. Do you still put that in Part 1?
Yep. Oh, that's a great question. It depends on the grant. It depends on, I would defer, Joan, anything in publication 225 about grant income. Some are taxable, some are not.
That's right.
Joan, off the top
are
of your
some-
head, do you?
So the bottom line is on this, you include them as income if you are going to expense the items that you pay for with it. Or
Yeah.
if you are not going to expense or depreciate the items that you pay for with it, then you do not include that in your income so that it never enters the picture. And there are some very special rules for conservation expenses. And I would encourage you to look at those rules in the Pub 225.
Thanks. And then for, let's say, donations to your farm, let's say you do a sliding scale farm share and people donate money so folks with low income can access your product. How would you include those donations?
They are farm income.
Okay.
Yeah, so you're giving them a product, you're giving them, so they're giving you a donation and you're giving them a product in exchange.
No, so let's say random people donate and other people get the product.
Oh, I see. I understand. Yeah, Joan, that would still be farm income, correct?
It depends. Again, this would depend if you are a for-profit business, but if you are a not-for-profit corporation, it may be dealt with differently. But we're not going to try to get into the depths of not-for-profit rules tonight.
And then if you're a startup, let's say you're in the startup phase, you're not filling out a Schedule F yet, and you, for example, have a GoFundMe for people to help you in building your farm, do you then have to fill out a Schedule F? Is that income?
No. So I would say no, that's capital that you will, no, that's
Those
not
are gifts.
associated with.
Yeah, those are
that's
gifts to you.
Yeah, so you're not farming, people give you money to help you start farming. That's capital that you'll use to start farming. So that's definitely not income from farming operations.
Okay, thanks. I appreciate it.
Oh, for sure. You're welcome.
And then I just had one
Any
question in the
questions
chat,
before
sorry. For custom hire.
Oh, please go ahead.
Yeah, for
Yeah.
custom hire for projects that have material costs as well as the labor. So for example, installing drain tile or well drilling, do you include, let's say I receive one invoice from the well driller that includes their labor and materials. Do I put that all in custom hire?
Well, so I would call a well a capital item, and a well, since you use it for multiple years, and I would just include the total cost of that well as a capital item. So it would include the labor, it include all the parts and everything. Is that, am I understanding it correctly? Joan, you want to chime in, or Steve?
Yeah, that's the way I would do it. It's a capital expenditure. It's an improvement to the real property.
Okay, same thing with
that-
drain tiles.
that
I
would-
guess that would be like a property improvement, so.
Correct.
Yeah,
Yep, and
and so
the-
then,
Again, the recovery
Then-
periods for those things you'll find on page 43 in table 7.1 of the farmer's tax guide.
yeah, so that's gonna be, and that, where that'll show up is you'll be able to expense the capital cost of that well and depreciation. That's where that will show up over time. So you'll be able to expense it multiple years. All right. If there are no further questions, I'll continue. And yeah, so here are the general depreciation and alternative depreciation, just the timeframes for, and again, right out of the farmer's tax guide, the timeframes that you're allowed to depreciate an item. So ag structures are 10 under GDS, 15 under ADS, automobiles 5 and 5, calculators and copiers 5 and 6, cattle, dairy or breeding 5 or 7. Wow, that's generous. That's pretty good. Drainage facilities, farm buildings, depreciate a farm building for 20 years. Let's see if we can, oh, water well, here's a water well right down here. So under GDS, you could depreciate the cost of that water well over 15 years. I won't get into it tonight. I'll just touch on it briefly. There is a depreciation law called Section 179, which allows rapid depreciation in the year of investment. So 179 might let you expense the entire cost of something in the year it's placed in service. So that, yeah, so these wouldn't apply then, but anyway, yeah, so fences, you kind of have everything. And when I work with farms, that a lot of times attached to their tax return is a depreciation schedule, and they'll have every single item listed and where it began and where it's at in these depreciation years. So, any questions on this thing?
Yes, I have a question. We can talk about the water well, I guess. If you're putting in a water
Sure.
well, it could almost be a repair. Because we all have wells. So if you're putting a new one in, is there a disadvantage to just saying this was a repair and it's 100% deducted?
Yeah, that's a great question. I would say there's not a disadvantage, because you're going to lower your taxable income in that year. So the more of it you can write off, the more is going to benefit you in that year that you've placed it in service. So again, it's another, and Joe and Steve, you can chime in too. It's a gray area, kind of like the engine overhaul or the tin on the new barn. I would still call a well a capital item, since you're using it for multiple years. If you're putting in maybe a new.
I will
Go ahead,
chime in on
Joe.
that one. That would be one of those things that you probably should capitalize, but then take the Section 179 expense deduction. The only challenge with that is you can't create a loss for yourself with Section 179.
Yeah. So, and I would also say it's really has to do a lot with your chicken point and your fear of auditing. Because the reality is, you could probably, and I know farmers do this. They'll hide they won't hide. They'll stretch that a little bit and put capital things as repair expenses, and so they can take advantage of that in that tax year.
Right.
So
That's-
again, it's
Yeah.
a question of your accountant and the chicken point, and if you get audited, can you defend the audit? Is it de minimis, like Joan said, relative to the size of the business? And so those things, but yeah. Teresa, does that answer your question?
Yes, it did. Thank you.
Okay, you're welcome. Anything else before I keep moving? All right, so this, just want to touch on this briefly. This is form 4797. So this is a form that records capital gains and capital losses. And just to get when I was lending, I'd look at 4797s all the time. And what I would see on those is cattle sales and machinery sales most of the time. And these are, it considers your, what you paid for the property, what you sold it for, and if there was a capital gain or a capital loss. And this, if we go down to the amount of depreciation that you use, et cetera, and we get a capital gain or loss. And at the end of the day, at the bottom of the form, it kind of totals up your gains and losses and says whether we have a favorable number or not. So, and this, the 4797 will, I believe it now flows onto the Schedule 1 and then onto the front of the 1040. So, yeah, so when capital items are sold, they go on this 4797. Just kind of a quick. Steve or Joe, you want to add anything to the 4797? So let's see. And it held more than a year. That's the big thing. So if it wasn't held more than a year, it's just considered ordinary income or ordinary expense. But if it's held longer than a year, now we're thinking of a long-term capital item. So again, I saw a lot, cattle equipment on this form. All right. Anything else? All right, Joan, what's next? If there are no
I think
questions.
I'm next, talking about
Okay.
keeping systems, filing systems, and records retention.
Okay.
So I will start sharing my screen again if I can. Okay, so I want to think about one of the questions that came up, is there a ledger system that is more generic? And that it would be to something like a OneWrite system that you see through the that you can purchase commercially. And then you can pretty much name the columns in your system however you would like to name them. And that is a handy tool, because basically as you write out a check, you are able to put it in right there. And it has carbon on the back of the check that makes that entry, and then you spread that across. So that is another handy tool for a generic system. And so I would encourage you to think about that as the type of system. The other thing I wanted to mention, in addition to the ledger systems, would be software. There are personal and there are business types of software. There's Quicken and Mint are two of the popular ones. There's many more out there. For very small businesses, many times that personal accounting software is a good starting place. It's a jumping off point into business record keeping without having to have the large expenditure. of purchasing a business accounting software. And then if you are thinking about really saying, okay, I definitely want business accounting software, want to be able to keep track of quantities, I want to really, dial this thing in as a business software where I can spread out and split expenses across a number of areas if I need to, then we want to move to something like QuickBooks is a good entry-level business accounting system. Centerpoint is probably one of the gold star ones with respect to agriculture. It is developed specifically for agriculture by Red Wing Corporation in Minnesota. Some of the accountants in the world around us are familiar with the Peachtree system and like that system, and you basically need to adopt an agricultural chart of accounts. And now that you've got that handy little ledger book, you've got something that's a starting place, and the Schedule F, you've got a starting place for your chart of accounts for any of those systems. So I think thinking about the pros and cons, the main thing is find a system that you can work with and that you have support for. Whether that support comes through your accountant or your tax preparer, or that support is through the corporate company that provides the software, I think that's the best thing to do is make sure you have the right support that you need, and you can easily share back and forth information with the people that need it from you, particularly with your tax preparer, if you're providing financial statements to your banker, that you can generate the kind of reports that you want from that. I think some of the things you want to ask about is you think about the system is, what type of a business do you have? Do you have a business that's wholesale that you sell in large lots with revenue coming from a few big chunks coming in a few big chunks each year? Or do you have a retail focus with daily sales? That's going to make a difference in whether you need something that can interface with point of sale software. Does it work with Square or whatever you're going to use for a cash register system? Those are important pieces to the puzzle as well on that side of things. So that's where I encourage folks to really think about, talk through, ask some professionals that you're comfortable with how they can best answer those questions for you. There, so I exit that and I stop sharing. Okay. And so the next area that, first of all, any comments, questions about bookkeeping systems? Does anybody have something they really like and they've had a great experience with that they want to share? Do that in the chat or unmute yourself. Feel welcome to share those.
So Joan, some of the farmers I work with, I've had experience with QuickBooks and Centerpoint, and I just, Steve teaches QuickBooks. The reports that you can get, I think I enjoy a lot. So I guess that's out my comment. And Centerpoint can do so much. It can do enterprise analysis, really whatever you want, that thing can do.
I think the other thing that's important is to think about how much you can afford to invest and are willing to invest, and what you need to get back out of the system as you're working with it. That's really what's going to guide you in your choice if you're looking to move to a computer-based system. What we're really trying to get out of a system is good, accurate information. And so we always have to think about making sure that we're putting things in accurately, that we're reconciling with our checkbook those are important tools along the way to make sure that we are doing a good job with our record keeping system. What about filing systems? You know, that's another place where, you know, you've got all of these receipts, you enter them into whatever bookkeeping system, whether it's your ledger or your computer-based system. What if you need to retrieve information? What if you need to replace something that you bought and you need to go back and find out where that is? What really works well for records retrieval? I know some people like to file everything from a certain month together. Other people like to file things by vendor. I don't think it matters so much how you decide you want to do it, but rather being consistent so that you can go back to your ledger system or go back to your software and you can find that transaction. And then from there, if you need that receipt, because you need to go back to the vendor with that original receipt for a warranty reason or replacement reason, you're able to put your hands on it. That's the key to those systems. I see a note here from someone. For me, the best system is one that you actually keep and use, even if it's a well-kept notebook. Caitlin, I think that's very important advice to share with folks. It's what you will do and what you can keep up on a regular basis. I can't say enough about spending a few hours a week or a few minutes a week or a few hours a month to keep that record keeping up to speed. I did the financial records for my husband's excavating business for many years. And I had an appointment with myself at 3:30 a.m. on Tuesday mornings. That was payday, and I did bookkeeping from 3:30 till 7 before I went to the extension office for more than 20 years. But that was my time of day. Early in the morning is when my head works best. So that was a really good time for me to do that bookkeeping and to keep up with it. So we didn't get behind and not have access to the information that we needed. Should we need to put a business plan together? Should we need to put a budget together for capital purchase? Those were the kinds of things that you wanted to have that system up to date and have your records in order. The other question that we frequently get is how long do we keep records? And if you look on page 5 of chapter 1, there's a good discussion of that, but just as a quick overview of how long to keep those records. What I would say is that the requirement is that you have to keep those records for at least 3 years after the date you filed your return or the date your return was due, whichever is later. And additionally, I encourage people to keep them for at least another 3 years, because if they go back and audit, they may want to go back and look at a prior longer year's return and or they may start digging into things and look into a prior year's return, and then that may refer them back a couple of years more. So 7 years is a pretty good rule of thumb. The other thing would be on assets, any of the capital items that you purchase, you need to keep them until they are no longer within your possession or ownership. And after you've completely depreciated those items, you still want to keep them on that depreciation schedule so that when you dispose of them, you have the information on the basis and how much depreciation you've taken when it comes to the time when you're either trading them in on something and or selling them for another purpose. So with that, we're getting down to where we're about ready to wrap up. Steve, Caitlin, any final pieces?
I have to share something that makes me laugh. Right on the IRS website, the link that I just shared, it gives you the length of time that you should keep your records. One of the rules that they have, though, is that if you are fraudulently filing your returns, they want you to keep records of that forever. So just keep that in mind in case you're any of your income tax stuff. You have to keep those records indefinitely, is what it says.
Could you go back to my question in the chat about amortizing and depreciating startup costs before you actually begin conducting your sales, and kind of what are the parameters and rules surrounding when you can finally make those deductions and how much when over what period?
Yep, I will.
Sorry, that's a really loaded question.
Nope, it's here. Business startup costs are addressed in chapter 4 on page 25. And the IRS says that you can deduct up to $5,000 of business startup costs and $5,000 of organizational costs incurred after October 22nd, 2004. The $5,000 deduction is reduced by the amount of the total startup costs or organizational costs exceeding 50,000. Any remaining costs must be amortized. See chapter 7 for the rules. So basically, in the early startup, it looks like you can do 5,000, and then after the first 5,000, you have to deduct those costs. You have to amortize those costs from there. But it gives detailed information on that in the Farmer's Tax Guide on page 25.
Thank you.
Yeah, so to quickly wrap up, Dayton mentioned that through the Cornell Small Farms Program, a 6-week QuickBooks class is offered online. That has been offered in the fall. It's offered in the fall, so that's done, but you can keep it in mind. Actually, the way it's set up, you could actually go through it yourself. Bonnie Collins, another colleague of ours, and I facilitate that class, but we do a whole bunch of screenshots on how to use QuickBooks, and they're in there. You could actually sign up today if you wanted to, and probably get something out of it. There are a variety of extension educators across the state that also offer QuickBooks classes. As Joan says, there's a variety of different electronic record keeping systems that are available. Just because of the generic nature of QuickBooks, we've kind of settled on that. But to update also, so Caitlin mentioned that we have 2 more coming up. One the first one in January 18th, I believe, is going to be a little bit more on this topic as well. We call it the Part-Time Farmer Tax School. We will come back, kind of revisit this. So if some questions come up between now and January 18th that you didn't saw, darn, I should have asked that question tonight. You have another shot at it on January 18th, but other things as well that would be pertinent tax related things for you to be thinking about, such as real property taxes, in New York State ag value assessment, and some other types of taxes. And then January 25th is going to be loosely leaving money on the table. There is several positive things, honest, of doing income taxes. If you're going to get some grants or some federal dollars or whatever, you have to have income taxes done. So Liz Higgins and another individual, is it you,
Bonnie.
Joan?
Bonnie.
Bonnie, that's right, Bonnie Collins, that will be talking with that. So I'll just throw it open for last couple of minutes that we have here. Does anybody have any last burning questions that they've got to ask us?
Hey guys, I work with a bunch of immigrant and refugee farmers that are just starting out, and a lot of them are making less than $1,000 in a year. So, and they're not ready to register their business just yet, even though we're encouraging them to do so. Is there some sort of cutoff you would recommend for, like, if you make this much money, you should definitely, file your taxes for this?
I guess the thing that I would throw out there is that if at some point down the road, a year or 2 or 3, they want to go back, they need to sort of grow their business, and they need to borrow a little bit of money, having those business startup year records, even if they don't file taxes, is an important place to go. And then the other thing is if their net income is less than, and other income from other sources is less than the standard deduction, plus their exemptions, then there is not a filing requirement.
Okay, but theoretically, if they have a job and they're filing taxes, even if they make $100, theoretically, they're supposed to be claiming that, correct?
That's the real, that's the rule.
Okay. Thank you.
Again, that gets back to the chicken point. And is it all cash? Some of those kinds of things that people have to make their own personal choices about.
Yep, gotcha.
Anything else? Well, we've reached the magic hour of 9 o'clock, or it's actually a minute after now. So thank you so much. This has been a jammed, action-packed 2 hours, and I hope that you have found it useful and beneficial. You have Caitlin's contact information, so feel free to reach out to her, and she can play traffic cop and get questions to this either Joan or myself, and we're here to help. So if you've got any questions, please feel free to reach out to us, and we're happy to help you, or contact your local cooperative extension office. So good night, everyone. Have a good
night.
enjoy the rest of your evening.
Good night, folks.
Bye-bye. Yay, team. Thank you.
Yes.
Thank you, guys.
All right, take care.
Dayton just hopped off, but Joan, is there any way you could send me your slides tonight? I'm gonna get the.
Yep. I will do that momentarily.
Thanks. I'm not working tomorrow, so if I don't do it right now, it's not gonna happen.